A session on the basics introduced us to various technical concepts already to understand the concept of bookkeeping or accountancy. We started with a business. And when I say business, it includes a trade, it includes vocation, it includes profession, etc. I said business is a very macroeconomic, comprehensive, large term. It covers all these sundries or subsidiaries or revenue earning activities. It is a business for which books are maintained or kept. Books are prepared for a business. And we had made a link or a connection between the forms of business and the types of business. Forms of business including a sole proprietary concern, a partnership firm, a cooperative society, a company, a joint family, and so on. Different lines of business also called markets or industries, like pharmaceuticals, software, airlines, hospitality, hotel industry, etc. So we made the link between the form of business and the type of business. It is only a difference in the scale of operations that the different forms of business take. So a business is nothing but an activity or the situation or the position of keeping oneself busy. Then we went on to the financial year. The financial year is the barometer. It is the measuring yardstick. I had also termed it as the accounting period. The financial year or the accounting period is the basis for determining profit or loss as a net effect of incomes and expenses. A financial year commences on the first day of April in a year and ends with the succeeding 31st day of March. So a financial year is the reference or the basis not only for bookkeeping or accountancy, even under various revenue statutes like the Income Tax Act, the GST, the Securities Exchange Board of India for stock exchanges monitoring companies. So a financial year is generally the reference period because accounting is a continuous cycle. The activity of purchasing goods, converting them through a process into finished goods for a manufacturing business is a continuous cycle. It doesn't stop. So the accounting or the bookkeeping has to be cut off, and that cut off is the end of the day, 31st March. Financial year. During a financial year, it is the incomes and expenses. Income versus expenditure, which decides upon the profit or the loss of the business. If it is a non-profit organization, we call it the surplus, excess of income over expenditure, or the vice versa. So business, financial year, income versus expenditure, profit or loss, the factors driving profit or loss. Every business earns certain revenues, technically called the turnover, and incurs expenditure in connection with earning that income. So it is the difference between the two, and we came to the basic business rationale. The objective of a business manager is profit maximization or loss minimization, depending on the trade cycle into which the businesses grew. The incomes and expenses arise out of transactions. So we said everything starts with a transaction. And one of the principles was to determine the profit or loss for a particular year to be as accurate as possible. There are two principles. Number one, all the transactions of an accounting period must be fully booked in that period. Number one. And number two, transactions booked in an accounting period should be those which pertain to that accounting period only. So all the transactions must be fully and comprehensively accounted for in the accounting period to reflect the true profit or loss made by the business. So the focus of bookkeeping or accounting is transactions. We monitor the transactions. Depending on the volume of the business, the size of the business, the nature of the business, the volume of transactions will increase or decrease. It cannot be generalized. For example, in a trading concern, in a trading business, the level of purchases and sales will be very high. The number of transactions is very high in purchases and sales. Whereas in a concern which is engaged in, let us say, infrastructure, in a manufacturing concern, purchases and sales could be less. For example, the business purchases raw materials, input goods, and stocks it for a period of 3 months. So there could be one purchase every 3 months or every quarter. So that the number of transactions in an accounting period is completely dependent upon the size and the nature of the business. So it is the transactions that we need to focus on in our pursuit of accountancy. What are the various transactions and how are they recorded? So transactions are recorded and summarized at the end of a bookkeeping cycle or the financial year or the accounting period. So we move on to how are transactions accounted, for which we need to know a sample of different transactions that a business may enter into. So we have already developed a certain set of technical vocabulary which I'll be using pretty often in our courses or sessions hereafter. Business, financial year, profit, loss, income, expenditure, and transactions. Recording, processing, reflecting the activities during the financial year. So now moving on to the transactions. Let me take a few examples to make the concept of a transaction clear before we come to the accounting of transactions. So a transaction, I said, reflects a business. A transaction is the implication of a business being active. Every business enters into transactions. For example, commenced or started business, let us say on 2nd of April in a particular year, started business with cash of 2 crores, which is too high. There are statutory impediments on this. But let us say, I'm just taking an example. And let us say furniture of about 45 lakhs. So a business is commenced with 2 crores of cash and 45 lakhs of furniture. Here I take the example of furniture. It could be plant, it could be machinery, it could be buildings, It could be books, raw materials, consumables, anything. So I'm taking an example on 2nd of April, a sole proprietor, keeping it as simple as possible, commences a business with cash and furniture. On the same date, let us say on the 2nd of April, this person, this businessman, opens a bank account with SBI and deposits, let us say, about 1 crore 50 lakhs. A small business with large sums of money, so that we don't have to keep pumping money in between. I'm just taking an example of commencement with large volumes of cash. A bank account is opened. So most of the cash is transformed into a bank balance. Let us say on the 4th of April, this businessman acquires, purchases plant and machinery worth about 80 lakhs for a manufacturing business. The plant and machinery which would be required to convert input into output. Let us say on the 5th of April, the businessman purchases raw material for about 30 lakhs. These are all business transactions. He has certain workers. So on 10th of May, he has, let us say, appointed certain workmen or laborers to work in his manufacturing plant. He has appointed about 20 workmen. So I've taken a set of about 5 transactions to start with. So these are business transactions. A transaction having an impact on the books or the records or the accounts of the business. To begin with, started business with cash of 200 lakhs and furniture of 45 lakhs. On the same date, a bank account is opened with the State Bank of India of 1.5 crores. On 4th, there is plant and machinery purchased. Some 6-7 items of machinery which will convert input to output worth about 80 lakhs. And on 5th of April, there is purchase of raw material of 30 lakhs. And on 10th of April, the businessman has appointed about 20 workmen, laborers, employees to work for him. So like this, month by month, day by day, transactions are entered into by the business. So these transactions have to be recorded into the books of account using the principles, concepts, procedures of accounting. Now, let me make one thing clear. There is a difference between the first 4 and the last transaction. The first 4 transactions have a monetary impact. Cash is paid or cash is received, or a check is issued or a check is received. There is a payment or a monetary impact on the business. There is a revenue or an expenditure, or there is a receipt or a payment. Whereas the 5th transaction does not involve money. I have appointed 20 laborers. Yes, it is a business transaction. But this cannot be reflected in the books of account, since it doesn't have a monetary impact, at least now. On the 1st of May or the 2nd of May, when I pay them their salaries or wages, only then that will have a consequence. So what we learn now is a business transaction, to be recorded in the books of account, must have a monetary impact, a financial implication. We'll continue.